Yeah, perfect. It's nice to have Jan VanEck here. He is very well known through his company, who is operating in the financial instrument business. But maybe Jan, please briefly present yourself and highlight what your company is doing. I think most of the people know it already, most people know the brand, but we need more details.
Sure. Zuerst wollte ich nur sagen, dass es tut mir leid, dass ich mit Ihnen nur durch Zoom heute sprechen kann. Ich bin auf Ferien hier in London, so ich wollte das sagen. Hören Sie mir?
Yes, but in case you want to speak English, this would be amazing because you have a lot of international guests.
No, don't worry. I was not going to give my whole talk in German.
Okay, got it. Yeah.
I was just trying to show off a little bit. My mother's German. Anyway, it's a pleasure
cool.
It's a pleasure to be with everyone today.
Very brief. Yeah. People were just clapping. People were just clapping for you speaking German, but this didn't go through the microphone to you. But now, please proceed, and happy to have you.
Sure. So VanEck is I would call it a macro money manager. We were founded in 1955. And what I mean by macro is that we look at the world, we look at political trends, economic trends, technology trends, and say, how does that affect your portfolio? And I think it is with that lens that we approach digital assets. So my father was concerned that inflation was going to be, and this is what he's best known for, inflation was going to come to the United States in the 1970s. And so he launched the first gold fund in 1968. Gold, as you may or may not know, was fixed against the US dollar at that time and had been for 170 or 80 years throughout the entirety of US history. So his point is that the economic and monetary expansion in the United States at that time could affect asset prices, and investors needed to have gold in their portfolios to protect their portfolios at the time. So that's the sort of philosophy of VanEck, if you will. We are a global firm, about 75 billion in assets under management, with operations in the US, Europe, Australia, and we have an office in China as well.
Perfect. Thanks very much. Giving a little bit of a background. So what did, well, you indirectly answered already the question, but I have to pose it very clearly again. What did you lead or what did you motivate to get into the domain of crypto assets and basically venture some business ideas over there? So what triggered you and when?
Sure. So first of all, I guess mainly we started our activities in 2017. But I think all of us, whether you're in my position at an asset management firm or whether you're in academia or whatever, we all are really children of a technology age. And technology comes at us very, very fast. And we have to see all kinds of technologies. This year, it's more artificial intelligence, and see, okay, how are they going to affect our businesses or our research or what have you? I would say, obviously, therefore, crypto was already on my radar screen before 2017. But as in 2017, I said, all right, we have to really do a deep dive here. Will Bitcoin disrupt gold? We're a big gold asset manager. Is this something that investors will want to sort of accompany gold or even replace gold in their portfolios? Because if so, that's a big deal to VanEck. So given that history, I think it's now obvious why we would want to get involved with Bitcoin. Blockchain as well as a related technology, and it's something that we have to keep an eye on, and we're doing lots of things around that.
Perfect. When did you start the Bitcoin ETN?
So the ETN, well, I wanted to say, I think what some in the crypto community know very well is that we filed for a physical, so-called physical Bitcoin ETF in the United States in late 2017. And as you know, we keep filing that application with the SEC, and they keep declining it. We started several efforts in 2017. One was we started trying to index the space. We self-index about half of our ETFs. And so we started offering crypto indices in 2017. our ETN sort of effort started getting going in 2020 after DeFi summer. We said, listen, this is crazy. This industry is definitely going to take off and be very major. And so we wanted to offer tokens here in Europe.
Perfect. And maybe this is a question which we not discussed previously, but I would like to pose it anyway. What's your opinion of Europe concerning regulation? Because Bitcoin ETFs and other instruments like this, they are actually possible. And there has been even an entire industry unfolding around this topic, differently like the US. So is Europe interesting on this perspective? And how do you view it?
Yes, I mean, I think, listen, it's a balance between enabling technologies and therefore ultimately reducing costs for consumers. Believe it or not, one of the most interesting and forward-looking countries in the world in this regard is Brazil, where they think everything is going to be digitized and tokenized, and they set up a payment network that's free for all their citizens to use. Yes, Europe, it's been fantastic. Switzerland has been forward-looking. Germany as well with the new regulations, very impressive. And given that the United States is going backwards in this regard, we're putting a lot of our efforts here in Europe.
Yeah, I just make a comment here. I'm personally very interested in, I guess you don't want to answer this question, but I'm personally interested in whether the, let's call it crackdown in the US on crypto is spilling over to Europe, you know, with political lobbyism taking place. But this is something we cannot answer yet with a clear yes and no. We have to wait for the future. Just a comment, not a question. Yeah, maybe some other questions on the cryptocurrencies and the ETN products. Which challenges did you face when starting this ETN ETF business? Did you have lawyers who understood the topic at that point of time? Did regulators understood the topic at that point of time? How did this happen?
Well, it's a very simple process that probably everyone in the room is familiar with, which is you keep knocking on doors. Right, and you knock on the door and you see if it's locked or whether they'll open you up. You know, we knocked on the door of Ireland. They were not interested in cryptocurrencies, but we were able to domicile our ETNs in Liechtenstein and then get them listed in Germany. BaFin was very open to that idea, and that allowed us to offer our ETNs across continental Europe, which is obviously really important to have a broad trading market for those funds. I think the same thing is happening these days with stable coins and lots of other products. It's different jurisdictions are trying to figure out where they're going to be stable, banking platforms for the crypto industry.
Yeah, makes very much sense. And where do you see the future of cryptocurrencies, crypto assets, and which role would you envision here for VanEck? Will you launch more products when the market is growing? Will the market grow? Are we still in a crypto winter or not? It's very difficult to judge right now.
I'd say for 2023, I was going to say something different, but I think the hot topic really is stable coins. And will a jurisdiction emerge for a bank-sponsored stablecoin? And what I mean that is like a narrow bank kind of concept, where the deposits would be represented by a token, and the assets would just be invested in something super liquid like treasury bills or something like that. And the bank would not be doing anything else, no mortgages, no lending. It would be almost like a money market fund, a single purpose bank. And I think that is something that so many people are working on. We're not particularly working on it, but when you look at Bahrain, Singapore, Brazil, Korea, it's just not clear which jurisdiction will emerge. It won't be the United States for sure. But I would say in the next year or two, that's definitely something that a lot of people are working on.
The stablecoin topic, even though stablecoins are not so stable anymore with accelerating inflation, but relatively to Bitcoin, volatility is of course very, very low. Hopefully nobody gets the idea of launching a stablecoin ETF, right? That would not make sense at all. Let's move on and talking about the regulatory landscape. How how do you ensure you're compliant with regulation? There are so many anti-money laundering rules out there. There are so many custody rules out there. So how do you do this? Which regulation or which jurisdiction did you choose? Which measures do you have in place? Maybe you want to mention some technologies in the background you're using for custody. Whatever you want to mention concerning the compliance side of the products.
Yeah, I guess what I would say is, in a way, it's simple. The answer is simple. We do what we are allowed to do by securities regulators, and mutual funds and UCITS funds are very, very tightly regulated. So it's very clear what you can do and what you cannot do. I think what's the broader answer is, who do you work with? It's more of an operational due diligence question. What brokers do you deal with? What banks do you deal with? A lot of these entities, these counterparties are new. Obviously, they didn't have enough risk management. And that is really the ecosystem. I can't tell you how many people, obviously that we've met at different conferences in crypto over the last several years that are now facing major operation and legal problems. We as a firm try to have a very open interface with the regulators because of our ETF business. ETFs needed to be, until several years ago, needed to be approved one by one. So we had a lot of interaction with the SEC. And then you can imagine we offered, for example, the largest Russian ETF in the world. And so when markets shut down like that, we deal with the regulators almost on an hourly basis. So we like to have a positive dialogue. We like to be a good player in the ecosystem. I personally advise the New York State regulator, the DFS, which is probably the most robust regulator of crypto operations in the United States. But there's the rules. This is a big game, right? As you know, it's not just the securities regulators, but also commodities regulators, other prosecutors, money laundering, and the bank regulators in the United States. So it's a rapidly changing ecosystem, as I said, that affects our counterparties, which is really the bigger deal than just the fund structure itself.
I think some people in the room are delighted to hear this because I screened through the participants list. There are quite a number of regulators sitting here in the room, or maybe and at home. I also saw the people on the streaming list. There are even the children of people working at the regulator listening to this. Yeah, I just looked at the screen, so it's very interesting to hear this from you, because it's also nice for us as conference operator to see people from the government coming in to search this knowledge exchange and so on. So that's nice to hear that companies like you are very open to this. As a person or as a company being open to traditional investment products, you know, that's your history, but also being open to alternative investment products, that's the last years, right? How do you see the integration of crypto assets in traditional investment portfolios? Is there demand from traditional investors, such as, let's call it, pension funds, endowments, and so on? Is there demand for it? How are they doing this? Would they prefer a Bitcoin ETF, or would they try to purchase Bitcoin directly or other crypto assets? So how do you view the integration of these new types of assets into traditional or holistic financial portfolios?
Yeah, so first of all, I probably have an extreme view. I think that institutions have basically not been involved at all in the cryptocurrency markets. It's been very much a retail business, and there's a huge demographic divide. Schwab, the brokerage firm in the United States, did a poll, and they said they saw that people under 35, like the vast majority, owned crypto one way or another, and they actually had it as a very significant part of their portfolios. Whereas people at the older end of the spectrum had no exposure and no interest. And I think the only institutions that we see investing in the industry at all almost did it by the back door, which is they invested with very large venture capital firms like Andreessen Horowitz. They happened to have that exposure, so they indirectly got some. I don't know. I guess my view is I have no idea whether institutions will ever get involved in cryptocurrencies. My conviction is around Bitcoin. I really think that gold investors, because I deal with a lot of them, see Bitcoin as an alternative to gold. Now, I like to say Bitcoin is like an 8-year-old child, meaning it's very, very early in its life. You can say, well, Bitcoin is volatile, but then in December, it was less volatile than the NASDAQ, right? So I'm very happy the way Bitcoin and gold have behaved during our recent banking crisis in the United States over the last month. And my view long term is that Bitcoin will grow and achieve maybe half the market value of gold. I think in 2023, we're looking at frontier market countries, maybe even something like Saudi Arabia, where their central bank would be involved in Bitcoin. So that is the next leg of adoption, I guess, that I would see.
It's an interesting point. Maybe we should have invited you also tomorrow, because tomorrow we will talk about Bitcoin and crypto assets. But it's nice to have you here today on the Digital Securities Day. I think it's very interesting what you're saying, that basically Bitcoin is in a phase of capitalization. It's a long run phase of capitalization, and we are in the very early state of this capitalization phase with all the liquidity and issues and the volatility stuff going on. That's pretty clear. I personally like the saying that Bitcoin not necessarily is directly digital gold, but it has the potential to become digital gold, because most of the people don't believe it yet. It only can become digital gold in case people start understanding it. And here we have lots of education to do. That's for sure. So with the volatility of the crypto markets, that's Bitcoin, Ethereum, and so on, how do you manage the risk for investors, and what strategies do you use to minimize potential losses?
Well, I think what we try to do is sort of set investor expectations around any investment that we offer. And we always, as fund managers, like to say, oh, this is a great thing and you can make money, but it's also a responsibility to try to identify the potential risks. And as with any disruptive technology, the analogy that I used 2 years ago was to the railroad in the United States. Probably the most disruptive technology, I would argue, the first version of the internet. But what's interesting is the stocks peaked several years before the railroads were actually built out. And a lot of railroad companies went bankrupt. So my point is that you can be right about the technology, but as an investor, you can lose a lot of money, even if you're early. So that's we talk to clients and say, listen, cryptocurrencies are sort of an aggressive growth type of investment. So you have value and growth, and you need to balance that in your portfolio. But you should have some exposure. You should consider exposure to cryptocurrencies as an aggressive growth kind of allocation.
Makes very much sense. And from a portfolio percentage, do you have any recommendations? Should like the normal investor have 0% exposure to crypto assets? Should he or she has 5%, 10%? Or do you maybe not want to do any recommendation or opinion in this regard?
No, of course, you can tell I have opinions about lots of things. So I think, first of all, let's talk about Bitcoin. I think that we are in a Fed tightening cycle in the United States. So that could last another 2 years or so. And when the Fed is tightening, you really don't want to own a lot of gold or Bitcoin. However, we don't know when that cycle is going to end. Probably the interest rate increases are near the end. But this quantitative tightening and this credit tightening, as we saw affecting banks, we just don't know when that cycle is going to end. So this is not a great time for Bitcoin or gold, but I think you do want to start buying some of that now. And I would say up to 10%. I'm very aggressive in wanting to protect portfolios against inflation in the United States because of the large amounts of debt that we have. As far as blockchain and all that kind of stuff, I think that's an aggressive part of your portfolio. Should be less than 5% of a normal portfolio. And again, of course, you have to say it depends on whether someone's near retirement and what their risk appetite is, right? I'm talking about someone who has a healthy allocation to equities and risk assets.
Makes very much sense. And with this, you indirectly also explained a little bit about the correlation of Bitcoin and crypto assets with regard to other assets. Last 1.5 years, also the Corona years, we saw a quite high correlation of crypto assets and stocks, especially tech stocks, right? And quite recently, in the last couple of days and weeks, we might see that the correlation is decreasing, or in other words, that crypto assets, especially Bitcoin, is decoupling from tech stocks. That's at least my feeling, but it's not statistically proven yet. Would you also think in this direction? Would you make a suggestion for this year? What's going to happen? Will Bitcoin basically deviate from the high correlation we saw in the last 15, 18 months, or will it be continued to be correlated to tech stocks like in the Corona years?
Yeah, again, I separate Bitcoin from the other crypto assets, and you've seen that separation over the last month, right? Bitcoin, as with a lot of crypto bull markets, tends to outperform in the early stages. So there's a big difference between Bitcoin and some of the other crypto assets over the last month. This year, again, the next halvening for Bitcoin is next year about this time. So that is typically, and we've also reached beyond the average length of a Bitcoin bear market. So I think the technicals within the Bitcoin market and also all the liquidations also support the macro story I was saying. As far as ETH and some of the blockchain technologies, I think. Listen, I think they really are growth investments, so I would expect that correlation to continue to a certain extent. Perfect. I'm not saying it couldn't outperform, but I do think that is the class of investments, that they are aggressive growth.
Perfect. So let's check in half a year and in 1 year whether this opinion might come true. I would also go in the same direction, that correlation between Bitcoin and crypto assets should decrease a little bit, and correlation between Bitcoin and tech stocks should also significantly decrease, especially in the long run, right? It also depends how you are computing the correlation coefficient with daily returns or weekly returns, so you get entirely different metrics. Okay, perfect. We have to move on with the agenda. Thanks, Jan, for being here. Thanks for the very interesting insights. And with this, I give the voice back over to Marcel, who is our moderator. Thanks for being here, Jan.
Okay, thank you. Nice meeting you.